Hey everyone, welcome back to the channel. Today we're going to compare three popular markets for traders: stocks versus crypto versus Forex. Each market offers unique opportunities and risks. By the end of this video, you'll have a better understanding of which market suits your trading style. Let's dive in. First, let's talk about stock trading. Stocks represent shares in companies, and traders aim to profit from price movements. Pros: predictability. Stocks are generally less volatile compared to crypto and Forex. Liquidity. High liquidity in many stocks makes it easy to buy and sell. Access to data. There's plenty of historical data and reports to make data-driven decisions. Cons. Limited trading hours. Stock markets operate during specific hours, limiting after-hour trading. Lower leverage. Leverage is available, but generally lower than in other markets, limiting profit potential. Company-specific sensitivity. Stock prices can be highly influenced by individual company news or reports. Next, let's discuss crypto trading. Known for its explosive growth, crypto trading offers both high risk and reward. Pros: 24/7 market. You can trade anytime, anywhere. High volatility. Big price swings offer chances for significant gains. Leverage. Some exchanges offer high leverage, allowing you to trade larger positions. Low entry barriers. You can start trading with small amounts due to fractional coin trading. Cons: extreme volatility. While volatility presents opportunity, it also increases the risk of rapid losses. Regulatory uncertainty. Regulations are still developing, and this can impact market conditions. Liquidity issues. Smaller coins may have lower liquidity, making trades harder to execute efficiently. Lastly, we have Forex trading. The foreign exchange market is the most liquid financial market in the world. Pros: massive liquidity. High liquidity ensures that trades are executed quickly. 24-hour trading, 5 days a week. Forex markets operate continuously during the weekdays, giving you flexibility. High leverage. Forex offers substantial leverage, allowing for larger positions with smaller capital. Economic indicators. Forex is heavily influenced by global economic events, offering opportunities to profit based on geopolitical changes. Cons: small price movements. Currency pairs move in smaller increments, meaning profits often rely on leverage. Geopolitical risks. Forex is sensitive to international political and economic events, which can cause sudden price shifts. High leverage risks. While leverage amplifies gains, it also increases the risk of significant losses. So which market is right for you? If you prefer stability, stocks might be your best bet. If you want 24/7 trading and are comfortable with volatility, consider crypto. And if you're interested in global economic trends with high liquidity and leverage, Forex might be your ideal choice. Whatever you choose, remember to manage your risk and develop a strategy that fits your goals. Let me know in the comments which market you're most excited about. And don't forget to like and subscribe for more content from Forex. Thanks for watching and happy trading.